Hello and welcome to Big Deal. Now let's decode small and medium REIT, a mini version of real estate investment trusts, an asset class which is newly regulated by SEBI, and action has really picked up in this particular space as newer form of real estate investment, and the first listings of SM REIT is likely in a few months. Now, apart from new listings, it enables also the existing companies engaged in acquiring and management of real estate assets through fractional ownership platforms or FOPs to transition their existing business model into SM REIT platform. Now, REITs are in the listed space now, and SM REIT is also making the way, expanding the scope and size of this sector. Let's understand with experts who have their skin in the game. Let me welcome on the show Anshul Jain of Cushman and Wakefield, Kunal Moktan, who's from Property Share, and Chandy from EY India. Gentlemen, so good to have you on CNBC-TV18. Now, Kunal, since you're a player in this particular segment, I want to first begin with you on how does the SEBI regulation change the game for you, and what are your plans for listing on the platform?
Thank you for having me. So until now, we were operating as a non-regulated tech platform offering rented real estate assets through our tech platform to retail investors. What the SM REIT regulations has meant is now we are under the regulatory framework of SEBI, which means that the product is now fully regulated. It can be marketed to a wider audience. The ticket size has reduced from 25 lakhs, which was up till now the prerogative of the platform, to a regulated 10 lakhs. So, being a regulated product is always very helpful for anyone in the fintech space. So this is something that we are very excited about. And it obviously brings a large number of players or large number of retail investors into the growing investor fold of FOPs.
Right. I'm glad that you mentioned the retail participation, because REITs have been listed now for 5 years in the country, and retail participation has been growing, but at a slower pace. In fact, the traction over there can be far higher. Now, Anshul is right here with me. Anshul, now you've seen the space. Let's talk about REIT on the whole, because SM REIT is essentially a subset of the REIT ecosystem. How have you seen the growth of REIT on the whole, and then the retail investor participation and interest in this asset class?
Look, as a product, it's a very exciting product, REIT, right? Because it gives you a stable income stream which is backed against some real assets, right? And these real assets are managed by professional managers, right? And I think what they're meant to do in terms of providing you a rental yield return, even through one of the worst periods for commercial real estate, which was the year 2020-2021, which is through COVID, I think was very good. And that's because it's kind of backed by real assets, which has real blue chip companies working in it, and therefore the quality of the leases are very good, right? Now, of course, from a capital appreciation perspective, there's been a little bit of an up and down on REIT. And I think partially it was a perception issue around return to office and whether the office as a sector will survive or not. But I think all of that's kind of going away,
behind us.
Right? And and I do think that the REIT offers a very good yield product to the investors. And I think as retail investors understand this sector a little bit more, I think there'll be more investment into it.
Yes, and actually SM REIT can have a fairly good contribution in making retail participation more emphatic in this particular space. Now, Chandy, SEBI guidelines have come which are akin to what the REIT guidelines have been, with changes as per the small and medium category of REITs. But there have been also FAQs where clarifications have come from the market regulator SEBI just yesterday. What are the key market moving or needle moving aspects and clarifications in those FAQs which stand out and make a difference?
I think, the FAQ is a really good, a good sign of SEBI listening to the market, and topical issues such as 10 lakhs is minimum, what happens to the stub, the stub investment in an old asset. asset that has to be migrated. Now, SEBI has prescribed what one can do. Whether that will go through how you do that is one part. The second point is again on migration. A lot of the issues are on migration because, as you know, without a regulatory framework, people were putting these FOP platforms together. So now a lot of these FOP platforms had debt instruments and CCDs. And there is a prescription on the quantum of leverage that real estate REIT, SM REIT can have. It has been clarified that, if there is a debt instrument under the old scheme, that is not deemed to be leverage. So that's a huge benefit. There were also questions on, the economics to the manager and how does, how does the property get managed? That has been clarified quite succinctly. On what can happen. There were points about existing investments and the manager's stake, which is 15%. Now again, for migrated assets, that is not required. So that's also a very big amendment or very big clarification. It was there in the provisions. It's been clarified as well. So these are, I would think, 3 or 4 big changes that makes it that much more viable and giving liquidity to, in some ways, an illiquid asset.
Right. So you enumerated what all clarifications came in and what it means. But Kunal, a few things on this which could be restrictive, given that the business models are not really compliant with how SEBI has now structured the regulations. Like a few of those points could be also the lot size, and on the other hand, 200 investors, 1 property. How do you see the challenge in terms of the migration?
Right. So there are 2 parts of the SM REIT listing process, like Chandy just pointed out. One is the migration, which is all the properties that FOP platforms have already funded and listed on their platforms and they currently manage, and all the new listings that are going to happen. So your question on all these lot sizes and 1 SPV and so on is sort of only relevant to the migration part, because going forward, all the ticket sizes will be 10 lakhs, only 1 SPV will own the asset and so on. That has now been completely clarified by the regulator. As far as the migration is concerned, the regulator has said that it's optional. So you need to go and ask the investors if they really want to migrate their investments into a listed trust vehicle. And there are some issues there. For example, the minimum investment has been 25 lakhs, which is something that PropShare started back in 2015, and which has then been followed by several other platforms. But what that means is that now you have, if you want to migrate that and someone owns 25 lakhs worth of shares, then he will have 2 shares of 10 lakhs each and 1 share of 5 lakhs. And till now, we didn't know how exactly this is now going to be migrated. In the FAQs, SEBI has clarified that there are 2-3 options that you can use. You can buy and sell between investors to make it 10, and you could put it in a trust and so on. So there are these issues, particularly in migration, which I think will exist for some time. The regulator has given an extra 6 months for platforms to migrate, and it's not compulsory. So I think this is more question of working closely with the regulator and trying to see how we can migrate as much as we can to the new framework, because it is definitely something that's helpful for existing investors of these properties.
Right. Katie, Chandy, on that particular point, one more aspect is that the investment manager should have at least 10 crores of net worth. Is that going to be a challenging aspect in this space?
I think the size of, and you have to think of where SEBI is coming from. They want, investment managers of repute, of substance, and they have prescribed qualification conditions as well. So this 10 crores of liquid, 20 crores of net worth and 10 crores of liquid asset, while it seems, it seems large, but given the size of properties that they will manage, a type of size of schemes up to 500 crores, I would think, the really serious investment managers will get this going.
Okay, all right. So these are the various, clarifications that have come in, which now, Anshul, makes this particular space ready to take off. And I was speaking to one of the players who's ready to list, and probably Kunal is also getting ready with his company as well. Now, looking at the different aspects, how do you compare SM REIT to REIT?
Well, I would say it's not comparable in many ways, apart from the fact that it's, both are listed and you have multiple owners.
And in the same space, and it's a subset.
In the same space. And I'll tell you why it's not comparable, because I think if you look at the large REITs, it provides a lot of diversification of properties within the portfolio.
Yes.
Right? So that's, I think, a very important part, right? And not only diversification across the size and the number of buildings, but also between geographies, between the type of building, sometimes IT, sometimes commercial, right?
Yes.
So, and second is the REITs either are managed by large global institutional professional managers who have many years of experience doing that, or large Indian institutions, and people who kind of developed and owned properties and leased properties over years,
Yes.
right?
Yes.
So it's a very different game.
Yes.
It's but of course, the yields would be less.
Yes.
Because the risk is lower than SM REIT. Now, SM REIT, I think, from a regulator's perspective, is a great idea, because you're basically trying to build in a protection layer to the great Indian love of buying commercial properties, right? So, and which is kind of fantastic, right? The issue will remain as to the size of each listing is going to be small, right? The cost of actually managing those regulations is usually high, so proportionate. So you need to have multiple listed vehicles to be able to manage it. And then the quality of the asset manager, right? So if 20 SM REITs are going to emerge in the next sort of, let's say 2 years or 1 year, right? What is the quality of those managers? What's their ability to lease? What's their ability to understand the changing nature of corporate requirements, who are ultimately going to be in that space and pay the rentals, which will then pay the yield, right?
Yes.
So I think that area is getting really complex. And an asset manager needs to have a very deep understanding of how the demand's changing and how the asset needs to be managed. And therefore, selection of that asset manager when one is investing into SM REIT becomes really important.
Right. So many points that you made, Anshul, and yes, there are many differences between REIT and SM REIT. Kunal, help us understand, especially on corporate governance. Now, there are investment managers or sponsors, but with the fact that RPT, related party transaction, is not allowed, which is the cornerstone of REITs per se, but they also have many global investors, which also takes care of the corporate governance standards in the mind of the investors. What is the comfort on corporate governance that SM REITs will provide?
That's a very interesting question. So, like Anshul pointed out, all the 4 REITs have large international funds as sponsors. One of them, of course, Blackstone, where I myself started my career and worked in buying some of those assets. So there is a sense of security that an investor gets when they know that a Brookfield or a Blackstone is part of the shareholding team or sponsor group in terms of corporate governance. However, if we look at the track record of REITs, like Anshul pointed out initially, in terms of the price per share and the dividends, they've not really performed. They are still sub 6%. The stock prices are still around the 300, early 300 mark for example, Embassy Office Parks, which listed 4 or 5 years ago at the same price. So investors have not really made any returns. And the corporate governance bit, look, I mean, every one of these REITs have also a developer who is a sponsor. And many times we see the REIT buying buildings of the developer. And increasing their portfolio, which in a way is sort of a related party transaction, which the regulator seems to have allowed in the REIT. But maybe in the SM REIT, they feel like this is something that we need to not do at the time, which is great, because you wouldn't want to really be in a related party situation buying your own assets when you are a minority shareholder in a REIT, which is what's kind of happening on the REIT section. So I would say that for SM REITs, this is not an issue at all. Related party is not allowed. It's completely independent professional manager who decides what to buy. And then, what's kind of the important differentiation between a REIT and an SM REIT is that an SM REIT allows a one-on-one investment straight into an asset versus a basket of investment properties like the REITs do. And in a way, that's diversification, yes. But an investor can always diversify by buying more of similar SM REITs, because an SM REIT is allowed to launch multiple schemes versus a REIT, which only has one trust that is listed. So one could invest 10 lakhs in an office property in Bombay, 10 lakhs in a retail property in Bangalore, and still be well diversified. And the corporate governance bit, of course, is under regulation itself. A related party is not allowed. So it's much better on the SM REIT part of the business.
Right. And Kunal, here I must also mention that you've seen this particular space since its inception. You're part of Blackstone Real Estate, and which developed and listed the first REIT in the country. So you know this particular sector from the very inception. But these were the technical details of how this listing and the platform development for SM REITs will happen. But what's in it for the investors? We'll discuss more on that with our experts right after this very short break on Big Deal. Stay tuned.